But in the meantime, we have our next guest also joining us. Jinesh Gopani is joining us, Head of Equities at Axis Mutual Fund. Jinesh, hi, good afternoon. Thanks a lot for joining us. So, what do you make of this rally, and what's the advice for portfolio investors? Because there's so much disconnect between the real economy and the market. Is there, or is this market pricing in even the real economy following suit 6 months down the line?
Yeah, hi, good afternoon. So clearly, after the economy picking up, there has been a lot of channel checks which are being done by various market participants, and as you get the data that things are improving, at least on the rural India and the semi-urban India, urban India. Clearly, you are seeing the signs of economy picking up. And also, Anuj, the flows which are around across the world, clearly if you see China, Taiwan, South Korea, where economies have opened up and there is no sort of a second wave kind of a situation as of now, clearly those markets have almost come back to pre-COVID or around those levels, maybe 3 or 5% here and there. Likewise, we have been underperforming the emerging markets in a big way because we went into this crisis later than those economies. And hence, as the economy is opening up, as the momentum is picking up, at least we have some numbers to now work upon rather than nothing in terms of the numbers, what kind of GDP growth rate can be assumed, or what kind of numbers the companies will start reporting, maybe not in June, but in September quarter. So likewise, as I think overseas investors would have pumped in money again in the China, Taiwan or South Korea markets as the liquidity is around. Same way we are seeing participation by them, and also from the domestic side there has not been many redemptions. You are seeing some of the sectors which have been down significantly because of this crisis. You are seeing the bounce backs happening. Again, I don't know whether it is a short-lived or a long-lived, or we are in for a structural rally, but I would say as numbers are coming and as money is sloshing around in the world, there is an heightened investment opportunity, at least in some of the stories.
Okay, so heightened investment opportunity in some of the stories. Jinesh, hi, good afternoon. I was going through some of the funds that you manage. You have a large presence in the pharma space, especially some of these stocks like Alembic Pharma, Divi's Labs, Lupin are on your list. But would you look to raise your holdings in the names that could benefit from the COVID drugs that they have developed, like Glenmark or even Cipla? Do you think it's a good idea to put more money to work here?
No, I think, that is as per our investment philosophy, and we have universe of stories to play around. So I don't think just because of COVID you would like to play any company. It is more to do with what will be the longevity of their growth post-COVID, and how the business models are shaping up over next 3 to 5 year period. So I would say it is better to look company specific stories, go deep down into what kind of molecules they are coming out with, and also not restrict yourself only to COVID related stories, but also look more wider and deeper as the opportunity arises.
Okay, by the way, the Bank Nifty has from the highest point slipped about almost 240-50 points, and the futures even more. Just keep an eye on that. I think Mr. Hussain was warning about a sudden fall, but let's see if this gets bought or this gets a bit more deep. Jinesh, what about some of these auto names? You have a lot of them in your portfolio, of course, both autos and auto ancillaries, some of the big ones. What have you made of the recent rally? And do you think this is a structural rally from the lower levels that we have seen?
I think, Anuj, it is still very early to say whether economy will bounce back. Do we have a V-shaped recovery, W-shaped recovery, L-shape, U-shape, any shape you may take it. I think it is better to go day by day. It is kind of a test match you are playing. Look with 2 to 3 year view and the companies who are able to survive over next 6 months in terms of their business models, balance sheets, definitely would come out as a winner for FY22. So I would really say the near term, maybe the rallies could be very, very fast. Even the corrections could be very fast, as we are still in the volatile phase of the even the crisis as well as the economy. I think maybe another 3 to 6 months you will get a better view how economy is shaping up and whether we have a second wave or a third wave of this infection, if at all, unfortunately, something comes up. So I think too early to say, but some of the companies are here to stay. They have strong market shares in their product categories, and obviously once you pass this phase, they would come out as a winner given their strong balance sheet and management pedigree.
Okay, please let's not talk about a second or even a third wave right now. I mean, we're not even at the peak of the first wave just yet, and things have gotten so tough for everyone. But the market is coming off now, by the way. The high was 10,393. We're at 10,314, so over an 80-point fall is what we've seen from the top. Jinesh, the other space I wanted to ask you about was NBFCs. You have both the Bajaj twins, Bajaj Finance and Finserv, in your model portfolio. Do you think the worst is over for this space?
I'll not go stock specific, but generally the strong tier 1 NBFCs should do well from here on. Obviously, I'm talking not from the prices point of view, I'm talking from the business point of view. If you really see during the lockdowns, there was a issue around liquidity, whether the liquidity will be available to these guys or no. And clearly the rates at which they were borrowing in the market shot up by 150 to 200 basis points, and now again it has come back to pre-COVID levels around of sort. So I think the tier 1 NBFCs who have strong capital, who have strong business model to sustain, and also are able to manage the credit costs and the NPA cycles well, I think they will definitely become stronger and stronger over next 6, 9, 12-month period. Having said that, again, if there is sort of a significant financial crisis, then obviously we'll have to see how they perform. So I'm looking more from a longer term point of view, 2 to 3 year, whether this NBFCs can grab market share from here on, as tier 2, tier 3, tier 4 NBFCs will vacate the place in some form or the other, or would have to consolidate over next 12 to 18 months. So clearly there is an opportunity for few players, and we like some of the stories what we have.
Okay, Jinesh.